Hey, what's going on, guys? Welcome back to Kiwoon Learning, and this is StockFix. The stock we'll be going over today is Century Communities Incorporated. Their ticker, CCS. Right now, they're valued at $63.77, and as of Friday, they went up another 2.2%. Big reason why I'm thinking about choosing this stock around the next week or so is because of the fact that they have their earnings on the 28th. This is very time sensitive, and I do think that the stock can go up majorly, but we just need to wait and see. One of the biggest reasons is that what we've learned in the past video, educational video at least, is that a lot of times stocks will do well based on good fundamentals and financials. The biggest thing that I found was their PDE ratio. CCS has a PDE ratio of approximately 10.4, when the average PDE ratio for industry is 13 to 15, and average industry PDE ratio for energy is around 17. And CCS is a part of both of those industries, and they're way below just on the PDE ratio. But just having PDE ratio does not really prove anything. I also wanted to bring in their ROE, which right now is actually at 30%. And as we covered in the last video, any ROE within 15 to 20% is considered really good. So for CCS to have a 30% as of right now is extremely good. But I want to base this off past earnings and what I do think they'll do on April 28th. As you can see here, CCS has basically just blown out every single time of their past four earnings. Average of around 55% on all of their earnings beating out in the last four. When we look at their last earnings, which was on February 4th, we go back here onto Yahoo and we see on February 4th they actually rose around 20%. And so yes, at this time, CCS was slightly undervalued, but I do think if there is a good red day between now and April 28th, CCS can be a very good buy. If they don't go above roughly 63 by the time April 28th goes around, I'm most likely going to hold a small position in them and hopefully do well on earnings. Again, earnings is a really hard thing to try to predict because you'll never know how market will do. So if they start running majorly up until earnings, I might buy them and then wait for them to sell off afterwards. Another big thing that's supporting my reason why I really do think CCS is doing really well right now is the fact that CCS right now on market beat has an average P2B ratio of 1.88. Again, we covered in our last educational video that a P2B ratio of anything lower than 1 is considered really good for the short term. Basically, any value investors are looking for P2B ratios under 3. So having 1.88, in my opinion, holding CCS for actually a long term is actually really good. Another huge thing is that they're based out of Texas, and right now, everywhere around the US, the retail for houses are just going on fire. And for CCS to be part of this, I do think CCS has been doing extremely well just based on the overall market for the housing market right now. We also go to tip ranks. We see that CCS has an upside of 17.09%, with three analysts targeting at around 75. After their earnings reactive as they were in their past earnings, jumping, 19.5 20%. But I do think that having around a $69 or $70 price range by like even the end of this month is relatively realistic as long as their earnings prove not to disappoint. Last thing I want to just talk about is their ranking on Zex. So I just define, good stocks, good potential runners, and on Zex they're actually rated a 3. And the range is 1 to 5, and you would think a 3 is not very good, but what I pay attention to here is their style scores. I mean, they have A's across the boards and a VGM of A. So it's an average of an A. Everything is an A. And yes, they are rated hold, but hold is not necessarily bad on Zags. That's the biggest thing I want to tell you guys. If it's a 4 or 5, yes, then you may want to be more aware, but anything 1 to 3 on Zags is relatively good stock. And that's really all I have for today, and I hope you guys have a great rest of your day.